At any rate, so much is happening. I just want to go on a rant just briefly before we start with Edwin, and that is I started to mention it yesterday, but it really bothered me when I read the transcript of it last night. There was a space yesterday, and I apologize for those of you that heard this me go on this rant yesterday. There was a space yesterday where a well-known, highly regarded uh, FinTwit personality was being interviewed in a YouTube by a pretty good reporter, and they were talking about the Israel situation and the war. And as I keep saying, nobody knows nothing. And this guy admitted, I give him credit, he had humility. He admitted that he'd been wrong previously, I think in two different reports. But that didn't stop him from still expressing his opinion and speaking about it with such precision, like anybody really knows what's going on. Plus, his guess is totally wrong. And what I really love or find hysterical about FinTwit these days, I mean, does one really think they're being told everything that's going on in Israel and Iran? NFW. And you got to stand back and look at it from the standpoint of second or third order thinking.
Hmm.
So you have all these simplistic morons who are breathlessly latching on to everything somebody's saying.
They're geopolitical space host superstars.
Yeah, these are the guys who were doing the AI stuff. I joke about this. They were on the AI, the Jevons paradox, a couple months ago, and they were doing the tariffs, and they were epidemiologists. We have COVID. Everyone's an effing genius at home.
Hmm. Don't forget the shipping containers. We got
The
that
shipping
too.
containers, I
We
know,
got
I know.
the shipping containers
I
on
know.
lock.
We got this covered. We're good. We're good. We're good. We're good.
Yeah.
And it's just the LARPing that goes on. The LARPing.
Oh,
And I listened to this podcast yesterday, and it went off like 45 minutes. It's still, the line. It's like, that's 45 minutes of my life
was
I'm
it
never
just
gonna get.
one guy talking or
Yeah,
what?
it's
Oh.
45 minutes of my life that I'm never gonna get back. It's like
Yeah.
what was the point of any of that?
Hmm.
But this is, as you said, the hellscape that FinTwit X has become. We got some things coming up we're gonna be doing here differently. But I've just had it with these people. They
Yeah.
have nothing to say, nothing to say, and it's
But it's like
almost
a
like
car crash, George. Like, I mean, it's entertaining.
no, but it wasn't. But it wasn't even entertaining. That was the thing. I mean,
Okay.
let's put it this way. You're right. It was consuming maybe, but it's
Yeah.
kind of like, yeah. So it was
Like, I
entertainment
get
in a
sucked
way.
into that stuff. Like, I can't help but, like,
I know, but it's like,
yeah.
but like Dilly, like if you had a boyfriend who was like listening to sports talk radio all the time, you'd say, "That's a huge time suck. What are you doing? You're wasting time, right?" Okay,
Hmm.
that's what this is.
It is. It's, yes.
Okay, and these people with the pretensions that, oh, I think, we think. I love the ones who say we think. Who is we? Your
Yeah. Who's
company is
we?
you. Okay, like, are you kidding me? But I
Yeah.
digress. All right, plenty more where that came from, but we didn't come here to. I got so much stuff to talk about, but we came here to hear Edwin. So, Edwin, welcome, my friend. Can you hear me? Okay.
Welcome.
Yes, George, thanks so much for having me on. It's an honor to be here.
Pleasure to have you here. Edwin, you know what? I'm not going to go through the BS formality of, Edwin, went to this school, that school, and he worked at this place and that place. And let's not bother with that. All right. So, um, you're well known on FinTwit. You've got a huge following. You must be doing something right. I'm a huge fan. You speak truth.
Me too.
Yeah, I'm a huge fan. And I don't know how, Edwin, how old are you?
I'm 27, George.
How do you get to have 114,000 followers at age 27?
Because he's 27.
you
Yeah,
know,
that's the problem. Yeah, because he's 27. So you said, Mr. Dilly, you think my age is liability? Is that what you're telling me? Anyway, Edwin, welcome. I talk too much. We all know that. But don't worry, I'm going to let you talk, and we'll get into questions and whatever. So, Edwin, why don't you tell us all about, how did 27-year-old precocious guy like you get to where you are? We don't want to hear the whole life story, but it's pretty amazing what you've been able to do. So, tell us a little bit about how you got to where you are, how you approach things, and what you look for. And why don't you have at it, Edwin, for 5-10 minutes, and we'll get into a dialogue. So, Edwin, the floor is yours.
Yeah, George, absolutely. And thank you guys again for having me here. My transition to the short world and my interest in the short world really happened freshman year of college when I got introduced to two big short sellers. One person I met my freshman year was Mark Cahodes, who I know has been a guest on your podcast and is a big independent short seller. He was a very early mentor. And the other person who was a big early mentor for me was Jim Carruthers, who ran $1 billion short only hedge fund called Sophos. I interned for him on and off all 4 years of college. And then my senior year of college, Sophos was in the early stages of Jim was in the early stages of retiring, so I needed to get a job. And that's when I came up with the idea of starting the Bear Cave newsletter, first as a way to share smart content online with the hopes of getting hired. But early in the pandemic, the newsletter became pretty big in its own right, and it quickly became a full time job for me. And that's what I've been doing for the last 5 years. There's two components to the Bear Cave. There's a free version that goes out every Sunday where I summarize new activist short reports. I track executive resignations. Every week there's 150 or so executive resignations, and I try to highlight the 5 or 10 that are most suspicious or meaningful. And I link to interesting stock specific tweets. In addition, twice a month for the paid readers, I'll write about a $1 to $10 billion US listed publicly traded company that I feel is harming customers, misleading investors, or on the wrong end of disruption. And what I would say I'm particularly strong at is using FOIA, the Freedom of Information Act, to get consumer complaints on businesses to better understand a company's relationship with its customers and what might be going wrong, and understanding these qualitative factors that are leading indicators of where the numbers are going to go. So that's what I really focus on: qualitative issues at these $1 to $10 billion public companies, and trying to highlight them for the readers of the Bear Cave.
Right. So Edwin. So I know you said 1 to 10 billion, which must kind of be the sweet spot because obviously, if you go much higher in cap, there are more eyes looking at the names, and then perhaps more efficiently priced, and it's more difficult to get an edge. You go too small, and market cap presents liquidity problems, and so on and so forth. So 1 to 10 billion is kind of like the sweet spot for those reasons.
Yeah, George, your intuition is completely right. So it's not a hard and fast rule. I'm happy to look at stuff bigger than 10 billion. Below a billion, it can get tougher because the readership just won't care that much. If there's at least 10 million average daily volume and it's borrowable, maybe I go under 500 million, or if I'm really stretching for an idea, go lower. But typically, 1 to 10 billion is the sweet spot for readership. And also, when you get above $10 billion market caps, companies might have problems, but they tend to not be as severe in my view. You know, you don't see a $50 billion company collapsing 80% in a year, or maybe you do in this crazy market, but typically you don't. The $1 to $10 billion, you can still find companies that are egregiously overvalued. The market might not know how to price them yet. The other thing I'd add in is I like looking at recent IPOs or SPAC mergers, or businesses that don't have a long history in the public markets. Because if you've been around 10 years, market kind of understands you and knows how to price you. But if you're more new, that's where I can come in, do FOIAs, and maybe get a little bit of an edge.
Wow, you sure you're only 27? I'm amazed at the way. I mean, everything you're saying is true. I agree with it, but I don't know half of what you know at 27. That's amazing. I'm really impressed, Edwin. But Edwin, before we go any further, that's a compliment, by the way. Before we go any further, I want to, because I'm going to forget otherwise. You said, I think if I got this right, you and I were talking a little bit earlier today. Not all resignations are created equal. Some resignations are more meaningful than others, like the language they use or whatever. Could you just like explain that a little bit further?
Yeah, so there's a lot of executive resignations, and sometimes executives just naturally turn over. So, what makes an executive resignation suspicious? The first thing I look at is the tenure. If somebody's there less than 3 years, to me, that's a big red flag because nobody joins a company just leave a year later. Uh, I also try to look at the timing of the resignation. Are they leaving in 6 months? Are they leaving next month? Or are they leaving effective immediately? With effective immediately being the most serious, and a long term transition plan being less serious. In addition to that, how long they've been there and how quickly are they leaving. I'll look at the pattern of resignations. This is kind of a one off, Or is the CFO leaving a month after the chief accounting officer resigned, and now a member of the audit committee is resigning the next month, and there was turnover last year? I'm trying to see if there's a pattern. In addition to a pattern of resignations, I might look at, is there a B7A indicating undisclosed investigative activity? Are there SEC comment letters? Trying to piece together a mosaic of what's going on, or if there's some sort of problems. So it's really trying to see, is there a pattern of resignations? How quickly are they leaving? And then one more thing I typically do is I always go to the executive's LinkedIn and see if they are writing anything about the company. And occasionally you'll find signs that it was like a negative departure. So I remember for Tattoo Chef, the former CFO, he moved his work experience to his education experience on LinkedIn. Throw shade at the company and be like, this was such a bad experience of putting in the education column. And the new CFO had their degree from the University of Phoenix, which is an online for-profit university. Those are the type of things like might be tough to model or build a real system around. But when you see stuff like that, it makes you chuckle and say, wow, this is egregious. And that stock ended up going to zero.
Tattoo chef. Like, I don't know. Edwin, it's one of my prejudices. I tend to think there's a correlation between, and I don't know if you could scientifically test this, the correlation between the cuteness of the ticker symbol or the name and then how bad the stock does. Like, usually scam ticker symbols underperform. I don't know if that's anecdotally, if you have any reaction to that.
I don't know. I think you might be onto something with that. Sometimes, the companies will pay a lot for like a ticker symbol or name. I don't know if it was DNA that paid for it,
Yeah.
or somebody, but when you're willing to pay like crazy amounts of money early on to get the certain name or ticker, I don't know. Maybe that's correlated with something.
Yeah, no, you're spot on. Edwin, I'll tell you a funny story. I had a guy a couple months ago. He contacted me on LinkedIn. I'm not going to mention names. I'm going to keep him in the Federal Witness Protection Program. He contacted me on LinkedIn. And I guess this is the thing. Maybe someone in this space knows about this. For all I know, Edwin, you know about this. The guy was trafficking in domain names. And so he wanted to, like, he owns a bunch of domain names. I think he got lucky on a couple of them, like, scam.com or, diversification.com or stocks.com, whatever. I'm just making up stuff. So he was trying to sell me a domain name. And he's like, oh, if you got the right domain name, dilly.com or whatever, like, that'll make. And I was like, look, if my content sucks, it's not going to matter. People aren't going to come to my website just because I got a cool domain name. So, Edwin, you can probably get this. He's like, well, so and so bought this domain for X dollars, and then they sold it to so and so for $2X, and blah 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 blah. So, okay, I get if you're telling me, domain names, it's like sports teams that just go up in value, but explain to me how, if I buy a domain name, like how I'm actually going to make cash flow out of it, And so it's funny. I'm sorry I took a detour there, but when you were talking about buying ticker symbols, I wanted to hang up on this guy once he realized what he was trying to do to me. But anyway, I digress.
Yeah. And George, can I piggyback on the domains for a
Sure,
second? We've
please.
seen domains only go up in value. I kind of wonder, in the world of AI, are domains going to have as much meaning? If you don't use Google as the top of funnel, but
Sure.
instead, are asking AI questions. And then the other thing I think of on domains is, some people know you can look up a domain and see who owns it, and oftentimes it's registered through proxies, so you can't see the actual person. Most people don't know you could actually see all the domains a company owns through something called a reverse whois search. You can search a company's corporate email address and see all the domains affiliated with that email address. And sometimes I do that just to see the domains a company owns, because sometimes, they'll say ourproductsucks.com, and they'll be registering domains or like just to defer lawsuits. Or, I remember one pet care company, they were like registering their domain like ourdrugkillsdogs.com. And I was like, well, wait a second. I didn't think they
Sorry.
were killing dogs. And now
All
that I'm
right.
buying the
All
domain,
right.
I'm starting to think there might be an issue.
So Dilly, hold on, Edward. Stop. Dilly. I
Yes.
gotta talk. I gotta talk to you about this guy. I
Okay.
mean,
What?
with Chanos having closed up, and we had Coyotes the other week at the conference saying he's not going to short anymore. Okay,
Yes.
I think we have the new we have the new guru right next to you up on the screen. This guy,
Yes, I
he
think
is the
so.
he's
That's
the air.
something I want. Oh,
Yeah,
sorry.
go ahead, go ahead.
No, no, I'm curious, if Edwin has any thoughts on, like, Mark's, pivot away from shorting, like
Yeah,
his,
yeah, yeah, Edwin, did you hear or did you see? Because I sent you the replays of the conference. You should go in and get a chance. I don't know if you heard about this, Edwin, already, but Chanos has said B Riley, not Chanos. Coda has said B Riley was his last one. He's hanging it up. He actually, I had him at the conference 2 weeks ago. You can go watch it. He announced two things. One, he wasn't going to short anymore. This was a big deal. And secondly, he had a long idea he was pitching. But did you hear anything about Mark's decision? Or have you spoken to Mark? Have you seen the video? I mean, because it really was amazing.
I haven't watched the replay yet, but I've heard good things about the conference, so I will be watching the replay.
Yeah.
And I did see Mark tweet that he wasn't going to short anymore. George, between me and you, I've known Mark almost 10 years now. I think every fiber of his DNA is a short seller. So I think I don't know anybody who's more of a short seller than Mark.
so you're
So I
calling
think
his bluff.
no, I'm not
No,
calling his bluff. I
no.
think he genuinely believes what he says. I think he's genuinely 5 years from now is going to find some other bad actor, and he can't help himself. It's
Yeah,
just in
yeah.
his
So
nature
An
to go
insatiable
short.
Yeah,
urge
Edwin.
to short.
So you're saying he'll be back. He'll be back. Yeah. It's sort of like Michael Jordan coming back after a couple years. He'll come back. There'll be something he just can't resist. He'll do it again. I'm with you, Edwin. All right, so Edwin, could you talk a little bit about your approach? Like, you mentioned, so you do FOIA stuff and all this, and so what do you look for in a short? I know you and I were talking like you try to avoid crowded shorts or obvious shorts, and I think you mentioned to me like you wouldn't do Carvana or whatever, not because you think it's a good company, but can you talk a little bit about what's your MO? Like, what's sort of the standard operating procedure for you when you're looking for shorts, Edwin?
Yeah, so I do a lot of kind of weird things. I generally prefer it to be off the beaten path, not heavily shorted, not written about, generally in the tech or consumer space because that's more understandable for me. Now, one of the first things I do that's going to be kind of odd is I immediately look to see who all the board members of the companies are and see what other boards they've been affiliated with. Because my philosophy is winners in the public market tend to continue to win and losers continue to lose. So if I see a public company and the board members have been affiliated with a lot of other companies that have done terrible, especially if it's a recent IPO that the market's trying to figure out, that's going to grab my attention. I focus a lot on a company's relationship with its customers, with the logic here being that you could look at two companies that have identical sets of numbers, identical growth rates, but if one has customers who are extremely dissatisfied and on the verge of canceling, and one has customers that are delighted and are extremely happy with the company, those two companies, even with identical numbers, should have very different valuations that are going to play out in the long run. So I'll just look at online consumer complaints. I'll go on Reddit. I'll go on TikTok. I'll go on YouTube. I'll just try to get in the minds of the customers, reading consumer reviews. If possible and easy, I'll try to use the product myself and develop an opinion. And if I get a spidey sense that something's wrong, then I'll bring out the powerful tool in my toolkit, which is using FOIA, the Freedom of Information Act, to get consumer complaints people are filing against companies. Because online, it's hearsay. Maybe a competitor's planting the rumors. Maybe the issues aren't that severe. Maybe the competitors are even worse. But once you get complaints that people are sending under penalty of perjury to state AGs, to federal regulators, and you can see companies' responses, I think you get a much better sense of how egregious the issues are with companies. So that's probably the most important thing I do. I'll do a lot of other games. Like most people know, you can see who the auditor is for a public company, but many people don't know that you can see who the specific audit partner is for a public company on the PCAOB government database. And that can be useful, especially for US listed Chinese companies. I look at SEC comment letters. I look at a lot of other random stuff, but the core tenet of what I do is trying to understand a company's relationship with its customers and the value proposition of its products.
Wow. Edwin, can you automate some of this stuff or use the computer? Because, like, I'm a computer idiot. So, but are there some tools you can use to make this thing go faster? Because I'd be clicking all over the place. I never get anywhere. So, are there some tricks that you can use to expedite this thing, make it really powerful?
Yeah, so far I don't think you can automate me, but I think computers, especially AI, can make what I do more powerful. So let me give you an example. I pay for ChatGPT Pro. I ask it a ton of questions. One of the questions I do for idea generation is now every month or so, I ask ChatGPT, please go through the list of all recent IPOs and SPAC mergers and identify the ones for me that have high levels of consumer complaints. And it'll come back to me
Whoa,
with a
whoa,
list
whoa,
of,
whoa! You can do that? You could do that?
yeah, no, and it's actually quite good. And it'll give me like eight tickers back, and it'll give me like a one paragraph summary on each. And I'll go through eight, and not all of them will be relevant, and I won't agree with this analysis on each one. But now, at least, like I'm looking at every IPO through the lens of technology, and it's helping me
Oh
find
my
the ones
god!
that'll be relevant for me.
Oh
So
my god! Oh my god! Anyway, I'll interrupt for 1 second. We had Adam Parker in a couple weeks ago, former strategist from Morgan Stanley, and he was talking about his extensive use of ChatGPT, and he wasn't joking. I mean, what you just said inspired me to recall this. He was talking about using ChatGPT to just write analyst research reports. In other words, he didn't want to hire any analysts, but he's like, ChatGPT is good enough, and more importantly, it's more objective than the bias that many sell side analysts might have. So he was like, he's totally confident he can get ChatGPT to write the research reports. His question was, and we had to figure out with compliance, will compliance allow it? So certainly you could see how it would have fewer conflicts of interest than an analyst is on the take. So I just have to chuckle when I hear what you're saying. That's unbelievable. So yeah, I mean, but the thing is, so you might say, okay, well, that's going to make the market more efficient because all these powerful tools. But then on the other hand, there's fewer and fewer people, doing active management. So more and more of the stuff's being indexed. This is perfect for you because it makes for a less efficient playing field. No?
yeah, maybe. So, I think with AI, even if AI is making the market more efficient, games are always going to change. I think there's already now startups that are trying to poison the AI training data sets to confuse the AI, so they recommend one company over another, and so there's always going to kind of be a market, I think, for a human to kind of interpret the data and see what's right and what's wrong. Um, in terms of the role of index funds growing, I'm not sure. I think there's always going to be kind of an active market. And I think, especially in the smaller cap arena and mid cap arena, where I tend to play, that isn't going away anytime soon.
Got it. All right. So let's get into some names, and then I want to get. If you have a question, please raise your hand because listen, I'm never one to be short of questions, but it's more fun when we have like Rusty or Schmuck or Gnostic or any of you guys come on up, TX, ask some questions. So Edwin, let's get into a couple names that catch your attention right now. So I don't know where you want to go with this. You want to totally your call. So like, why don't you talk about a name that's the apple of your eye right now, and why is it interesting to you?
Yeah, so one company I've written about twice in the bear cave now, and I think it should be at the top of any short idea list is Signet. Signet's $3 billion publicly traded company. They're the largest retailer of diamond jewelry in the U.S. through brands like Zales, Kay, and Jared.
Oh,
You probably
Jared,
saw
Jared, yeah, Jared. Okay, I got to keep going. Yep.
mall-based retailer, largest retailer of diamond jewelry with an emphasis on diamond engagement rings. They've got several headwinds, such as declining mall traffic. There's better value proposition from independent jewelers, but the big, kind of single factor of the short thesis is the growth of lab-grown diamonds. Lab-grown diamonds are chemically and optically identical to naturally mined diamonds, but much, much cheaper. And they're getting higher quality every day, and they're getting cheaper every day. And as lab grown diamonds become the dominant source of diamonds in the industry, I think all diamond prices are going to go down. And when diamond prices continue to go down, they're going to become so commonplace that nobody wants them. So I think the diamond industry is just going to be totally disrupted by lab grown diamonds over the course of the next 5 years. And as a result, Signet is going to suffer significantly. And I want to just give one historical anecdote about how powerful this can be. which is in the late 1800s, the most valuable metal in the United States was actually aluminum. And I encourage people to look this up because the top of the Washington Monument was literally 100 ounces of aluminum. The wealthy women of the 1800s would literally wear aluminum jewelry. And now aluminum is so commonplace. In fact, they found a way to like smelt aluminum more efficiently, and the price of aluminum fell 99.9% over the course of a decade. And there's no more aluminum jewelry businesses. I think that you're going to see a similar thing happen with the diamond industry today, where 10 years from now, they're just going to be so commonplace, and you cannot differentiate between a natural and lab grown diamond. Literally, jewelers can't do it anymore, that it's just going to like make all diamonds worthless, and a company like Signet is uniquely positioned to suffer from this.
So seriously, these fake diamonds, these lab grown diamonds, not fake. These lab grown diamonds, they're just as good as a real deal.
Yeah, they're not fake. They're very much real. This is like the important thing. It is literally identical. In fact, the way you tell the difference between lab grown and real is you look at the imperfections, and real are going to have more imperfections than lab grown. So the thing is, it's tough for the lab grown to mimic the imperfections of the real right now. But right now, if you go into a jewelry store, they cannot tell you the difference. Like there's literally, I think, a person's being prosecuted in Manhattan for going into professional jewelers and convincing him that lab grown diamonds he bought were the real deal. So a jeweler right now in the United States cannot tell you the difference between lab grown and real. There's only one like lab, the Gemological Institute of America, that can do it. And one day they're not going to be able to do it. It's kind of like,
Oh man.
imagine if you could just produce gold for $10 an ounce in your basement, and it used to be you could tell the difference, but then there's no way to tell the difference. Then gold becomes worthless, right? It would be like huge.
Oh my God,
That's what's happening with diamonds.
Edwin, you're on fire. I'm just looking here as you speak. I'm just checking some numbers. So even before this homegrown diamond thing started, Signet was screwed up already. I'm just looking here. X1 acquisition, their nominal sales, X1 acquisition, and nominal sales have gone down by 7% over the last 8 years. So in real terms, I mean, this thing is a freaking disaster. So talk about melting ice cube or whatever. Like, I mean, this thing was a POS before this all happened. So, like, what makes this like not being a slam dunk from here? Like, what do the Bulls believe? This just looks terrible.
So I think there's a few ideas. First, it's cheap on a free cash flow basis. Second, some people would say, Edwin, you're so naive. This lab grown diamond business is overblown. Have you ever talked to a woman? They definitely prefer a real diamond, not lab grown diamonds. So that would be number one. Two, what they're going to say is lab grown diamonds are actually a benefit for the company, is what a bull will
Oh
believe. A
God,
bull will
why?
say,
Why?
because there's higher margins, George. If you can buy them for free, and sell them for 80% of the
Right.
cost, then you're. But here's what they don't get. Yes, there's higher margins today, but the prices are going to come down so much and have continued to come down. If you look at the prices of diamonds, literally, like go to the IDEX diamond index, the diamond prices for natural diamonds are going down every month. For lab grown, they're going down every month. So even if you get a temporary benefit right now, this quarter, next quarter, whatever, eventually the diamond prices are going to come down so much it affects the results, regardless of what the margins are. If you're selling diamonds for 90% lower than what you're selling them today, I don't care what your margins are. They're just not going to be enough profit to go around. What you've seen, especially from younger generations of women, is that they don't mind the lab grown diamonds because, again, it's chemically and optically identical. You can get a bigger ring, clearer cut for a lot cheaper, and nobody's going to know the difference. It passes the diamond tester and everything, and then you can spend an extra $5,000 on your honeymoon. It's an easier trade-off for people to make. It's more environmentally friendly. It doesn't use child labor or any form of physical labor harming people. It's just kind of the way of the future. And every time I write about it or tweet about it, I get so many emails and people reaching out to me who are young, on the younger generation, saying,
Hey,
"I bought it." Yeah.
Edwin, can anyone tell if you gave a diamond to a girlfriend, could she tell the difference between between the artificial one and the real one?
No, and a jeweler can't, and a jeweler's loop isn't going to show you at all. Now that wasn't the case 5 years ago, but now the lab grown diamonds have gotten so good. Literally, the only person that can tell is the Gemological Institute of America, and even they're being fooled. Okay, so professional jewelers can't tell the difference. It's just that for half the price, you can get a bigger ring that's a clearer cut. And the prices are only going to go down. So it's an easy trade off for younger generations to make.
So in terms of like, what's going to make move the stock? I mean, you think they're going to have like disappointing earnings? I mean, you said it's cheap on cash flow, but it sounds like the growth prospects for that cash flow are pretty abysmal. If anything, cash flow will go down. So, what does the market believe that you don't believe, and when will the market be disabused of that notion?
I think it's going to take a year or two to play out, and I think it will show up in the numbers. I just look at their earnings commentary, and I encourage any investor just go look at the Signet earnings commentary over the last year. And the management does not communicate the same view about lab grown diamonds that I'm communicating to you, George. They think there will continue to be a market for natural diamonds. They don't think there's going to be a ton of price compression for natural diamonds, and they say things like, well, we're going to retrain our store staff to better educate consumers about the value of natural diamonds. We're going to add warnings to the receipt for lab grown diamonds to tell consumers that
What?
the lab grown diamonds aren't going to hold up in value. Of course, what they don't say is that natural diamonds aren't going to hold up in value either. So
Right,
they very much have this view we're not being disrupted. And those are the types of companies that get hit by disruption the hardest. They were leaning into it and they said, well, we understand that the loves of the future might not be diamonds, and we're going to have all these other solutions, and we're going to be lab grown first. I would be more sympathetic to them, but it's very much kind of old school. Like, we're going to sell lab grown, but we think there's always going to be a market for natural, and it isn't going to affect prices, and it just
right.
is, and it
I
might take
got it.
a
I
quarter
got
year.
it. I got it. I got it. I got it. All right. Let's talk one other idea, and then we're gonna go to Rusty. So I don't know what you want to talk about. You want to talk about kinder care or something else? You and I threw some names around before. What do you want to talk about?
I think KinderCare might be a good one to talk about. It's another one I've written about twice. $1 billion daycare company in the United States. They operate about 2,300 daycares. A private equity backed recent IPO. Uh, their issue, it's kind of similar to the first company I got famous for, Care.com, which is they've got a lot of safety issues that aren't kind of being properly written about. So lower middle income, hardworking consumers, they drop their kids off at these daycares. About 35% of the company's revenue comes from government subsidies. And just overwhelmingly, if you look at local news stories, these daycares aren't doing their job. One kid overdosed on cocaine at a daycare because one of the daycare
What? Wait, wait,
workers.
wait, 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 wait. A kid overdosed of cocaine? What?
Yeah, because a worker, KinderCare worker, brought cocaine in their backpack and then left the cocaine in the backpack, and the kid got inside the backpack and ingested it. And then KinderCare didn't report it to the parent, but the parent knew something was wrong, so brought their child to the ER. And then the cops accused the parent of being the one who brought the cocaine, but that's when they figured out it was the daycare worker. But these aren't isolated incidents, George. In several occasions, kids have literally escaped from KinderCare locations and been found like walking across the street. Like 3-year-olds are like caught on like Facebook lives and stuff, just like waiting in the middle of, like, they can't even, like, and these aren't just like isolated incidents of kids being abused, kids, like just having all these bad outcomes. If you even look at this like state licensing level data, KinderCare, which you'd expect to have the best standards because it's a large corporation, is actually way below average. So you combine it all together and you got private equity involved, you got cutting costs, you got bad parent outcomes, you got state subsidies, you got a brand that kind of isn't liked by any of its constituencies. I think that's kind of a recipe for disaster.
Edwin, all you gotta do is tell me they got some debt, and we're really cooking here. They got some debt. Got a bit.
And yeah, they do have about $1 billion in debt.
Why
So
would I possibly think that? Oh, private equity. Oh, sorry, Edwin. I'm sorry. I'm drinking. I'm drinking a little earlier today. I'm having a little Italian white wine. But between the between 3 year olds wandering around in the street and the cocaine and the fake diamond, the whole lab grown diamonds, I'm like, here, Jesus, this is like you can't make this stuff up. So let's hold it right there. I got more questions, but Rusty, I don't know if you're there, but this guy is
Yeah.
this guy's on fire. So Rusty, have at it.
This is great. Y'all can hear me,
We
I
got yeah,
assume.
we got you.
This is amazing, and I love everything you do, your analysis, your approach, because I don't buy anything until I've read almost nearly every review. So I find that intriguing. Um, you know, one thing, because of this year with all the tariff things going on, every component that goes into it doesn't matter the vehicle. But what are your thoughts on some of the car manufacturers? It doesn't have to be just and like and Carvana. I know there's been a lot of talk there. Just curious.
Yeah, so fair question, Rusty. And the simple answer is I don't have a strong opinion because I just don't know them well enough. I think I generally stick to more like consumer and tech stocks because I think they're easier for me to understand. The Carvanas and the Teslas of the world, because they're just too heavily talked about. I don't even waste a brain cell on them. I think there's lower hanging fruit elsewhere. In terms of other car manufacturers, I just don't know. There's gonna be so much change in the auto industry. It's like, I feel like if I was even a full-time autos analyst, I'd have a tough time understanding it. So I wish I could give you a better answer, but I don't know and don't have an informed opinion.
Okay, well, what retailer? Who's your worst retailer out there right now?
Well, we just talked about Signet, and hold on, I made a fun report on the worst retailers. I'm pulling it up on my phone. Zoomies has been around so outside of Signet, which is my favorite. Zoomies is a shoe retailer that's been around forever and kind of gone nowhere with really old
Yeah,
management.
when I got interrupted, maybe Dilly can talk about this. I don't think Dilly does. Maybe she does. Edwin, Zumi is one of those things where these women do this. I can't believe it. They order like it's like free return policy. You could order like 10 pairs and you return like 9 of them. And it's like no problem. Are they victimized by that or they don't have that problem?
I don't know if they have that problem. I think it's just kind of like an outdated mall based
Okay.
brand, and it's the same management for 20 years, and stock has gone nowhere. I'm looking at my list. Like Land's End is one on the list, and that's just doesn't connect with younger people. Children's Place. I'm trying to see if there's something with like bigger market cap, kind of on
Right.
the retail
Well,
side.
let me
Uh,
make it a little easier for you, Edwin. So, Russ, if you don't mind. So, Edwin, you did a report in the last couple of months. I think you did explain how you did this report. It was like 100 serial underperformers, if I remember correctly, and you had like so explain the criteria. Like, how did you come up with this list? And then when you had this list, they dropped in different buckets. You had like melting ice cubes, value traps, bad balance sheets, whatever, blah blah blah. So talk about that list at a high level. We don't have to get in all the names, but how did you set up the list? And then what sort of buckets came out of that list?
Yeah, so I think I made this list of 100 long-term underperforming companies, partly because of how the market's acting right now. Every the stocks are going crazy, everything's hitting all-time highs, people are getting blown out of short books. I think now is the time that you kind of maybe want to shift more to these sleepy old companies that have been flat for 20 years, and they can be your funding shorts, so you can get more long, exciting stuff. Now, the problems at 100 long-term underperforming companies, the only real criteria is that every company on this list must have materially underperformed the S&P 500 since IPO with dividends reinvested. And ideally, I'm looking for companies that have underperformed materially for at least 10 years. So I did a bunch of things. I got a list of every company that's underperformed the S&P 1500 since inception, and that's like a few hundred companies. I just go through each one and I try to see who has like old management, right? So if you have the same management team for 20 years and have underperformed a lot, I think you're going to continue to underperform. Now, if you've underperformed for 20 years but you just got a new CEO, I'm not saying you're going to turn around, but you might. So I don't want to include you on my list. But if it's the same guy who's been there for 20 years and you got no new management, then I want to look in a little deeper. Is the board old? Can I get any more confirmation that the product is just like not great and nothing's changing? Then I think you want to get on this list. I look at Glassdoor reviews and see like what are employees saying. I do look at the balance sheets a little and will prefer companies with debt. I like to think of companies that are like slowly on the wrong end of disruption. And doing this, like you find all these companies no one's ever talked about. Like I don't know if you've heard of OI Glass. They're like a glass bottle manufacturer, and I think for the last 30 years, their stock is literally just completely flat. And
Wait,
it's been
is
kind
that
of
like
hard.
Is that like Owens, Illinois, or something? What is that one?
Yes.
Yeah, okay.
No, it is.
You,
Oh,
you
it
know,
is. Oh,
yeah, Edwin, don't you love when companies Gnostic, hold on, another sure sign of scam when companies change their names, like they think they can hide from you. Like who are they kidding? You should do
yeah.
a
And
screen on Edwin. You should do a screen on name changes. I'm sure it's statistically significant. I'm sorry.
no, I think you're right. And there's just all these ones that like you forget about. Like there's still Xeroxes around and Deluxe Checking and
Xerox is still around.
NetScout and
Xerox is still around? Are you serious? Xerox
yes,
exists?
sir, and like Yelp and like TripAdvisor. There's just so many like of these things, or even people don't realize like Goodyear Tire since 1962, its total return is 300% versus 47,000% for the S&P 500. You just like, and it's like kind of similar. It's like there's these very capital intensive, low pricing power businesses that like, are doing just a good enough job to not go away, but they're never going to be like a long term outperformer. Just short, kind of like if you're really struggling to come up with short ideas, short a bucket of these things. It's not like Wall Street Bets is ever going to go and say like Goodyear Tire to the moon, or or Xerox to the moon. It's like if you're really struggling with short.
Edwin, you're hurting me. You were so good. Xerox to the moon. Like, seriously. All right, hold on, Edwin. You're hurting me. Just hold it for a second. Gnostic, you want to work this guy over? It's you. Over to you, Gnostic.
Oh, I ain't going to work him over. I did Yellow Pages years ago. Same situation, exactly the same situation he was just describing. Old management, basically entitled, encumbered, didn't look at anything. We went and talked to them. Go online. You guys are going to get killed. Internet's going to wipe you out. A whole bunch of like all the stuff, all the presentations. Did it to the CEO, did it to the board, and nothing. They didn't do anything. And we're sitting there looking at them, going, "Why?" And what they didn't realize is we're interviewing them as one of two things. Either we're going to take them online and basically have Yellow Pages online, or we're going to short the shit out of them. And we're looking at the board sitting there going, you guys understand that the three of us sitting here interviewing you have two things in mind: taking you out as a company and putting you online and going into competition with the original search engines that are out there, which is your best opportunity to sit down and do it, or we're going to short the ever loving shit out of you. And every criteria that Edwin just went over, they filled every single solitary criteria of it. Did the same thing with the Wall Street Journal and did the same thing with New York Times, but they had family behind them and there were issues there. There was an issue about the number of shares held by the Wall Street Journal family versus the multi shares versus the single shares. So the voting structure just screwed that one up. But he like I have never heard anybody in the shorting business come up with the criteria that he just came up with. And I can vouch that every time I've made a significant amount of money shorting, it's on exactly the same criteria.
Wow. That's amazing.
Sorry, I could go into technicalities and do the rest of the stuff about shorting, like how the hell do you find, available to borrow? How do you do the rest of the
Yeah.
stuff? What do you do about
So,
fails to
yeah,
deliver?
so yeah,
What do
so let's let Edwin talk about that. So Edwin, crowded shorts. There might be times when the fundamental case is just so outstanding you can't help yourself. But do you have a tripwire where, like, if it's hard to borrow, or if the percentage of short interest is too high, you'll just say no, I'm not going to do that.
Yeah, or if I do, it's going to be more for like kind of a journalistic pursuit rather than, here's a super actionable idea. But, I always check just iBorrow Desk, which is to me like a really easy way to see how much is available for borrow and the borrow rates, just to kind of get a
Sorry,
sense, like a
could you
pulse
for
on.
everyone in the room? Could you just repeat that? What do you look at so everyone can follow you? I.
There's a
Yep.
website called iBorrow Desk, and you can just type in a ticker,
Mm-hmm.
and really easily see what the borrow rates are from Interactive Broker and how many shares are available and how that's changing over
And
time.
that's free for anybody. Anybody can do that. I borrow.
Exactly, yeah, completely
Yeah, but
free.
that's but you have to remember that's only interactive brokers. Marquise charges quite a fee for getting all of the collected market available information. And then you've got to get a Marquise subscription, which is fairly expensive. But the interactive broker one, you always have to remember that's basically a retail set of people who are boring to short, and it's not a set of professionals. So you can get slammed pretty hard on that one.
Right.
Yes, that's totally fair. Yes, I think the bigger thing is, I just try to, when you're doing more off the beaten path stuff and not that stuff that's not crowded, borrow becomes less of an issue, getting squeezed becomes less of an issue. So that's why I really try to think independently and go off the beaten path.
That makes sense. So let me ask you, Edwin. Have you ever been threatened or harassed by managements or guys who own the stock?
You know, I've never been sued. I have received cease and desist. I've been doing this long enough that I kind of have a good sense of how to avoid it. Typically, foreign companies are more litigious than domestic
Wait, wait,
companies.
wait.
Like
Foreign
the
companies are more litigious? Seriously? Wow. Okay.
Yeah, so somewhat counterintuitively, but yeah, in fact, the cease and desist I got most recently was a foreign company, even though I almost exclusively write on U.S. companies, partly because culturally there in the U.S. you can criticize those in power and we accept it. That's not necessarily true in other countries. It's like crazy that you're just going to be attacking somebody out of the blue. In other countries tend to have like stronger defamation laws than the United States. And then also counterintuitively, smaller companies are a lot more litigious than larger companies. You say nonsense about a large company, they're just going to ignore you. Smaller companies are the ones that are really egregious, that are going to take it, very personally and have more to lose. So they're the ones that are going to be more likely to sue you or try to wear you down on legal fees. So just by sticking to US companies in the larger market cap range, that's a kind of a good place to be. Now, on top of that, I really try to be understated with everything I write. So I think sometimes if your incentive is to move the stock, then that can create an incentive to maybe exaggerate or use language that's too aggressive. But with me, like title is always problems at XYZ company. It's as understated as humanly possible because I just want to let the evidence do the talking. And I think when you do that, you build credibility, you build readership, and that's what matters in the long run, and that's what helps insulate you. So I've never been sued. I've received cease and desist and some nonsense over time, but that's kind of
Right.
the plan.
Okay. So Dilly's going to take me to task on this, but I can't resist. I'm sorry, Dilly. Um, so if you're Edwin, I really approve of your approach. You're speaking to the audience, so you don't have to get in an argument with somebody. So, Dilly, I'm really sorry, but everyone will get this, okay? If you're in the elevator and someone passes gas, okay, it's like it's kind of hard to ignore. It's like, oh, not what's that elephant in the room? What's that smell in the room? So, if you could put the stench out there, Edwin, about the accounting impropriety or whatever, it's kind of like hard for people to ignore it. Like it's out there, and you create that element of doubt. And the interesting thing is, you know, if one has been incorrectly accused or it's been insinuated that the company Gnostic is running is engaged in some accounting chicanery, well, it's really pretty simple. Gnostic will come out right away and say, "Hey, here's our rebuttal. You said we took the wrong provision, we didn't depreciate enough, whatever." And point by point, just rebut what you're saying. But if Gnostic doesn't say anything in return, like, what's the matter, Gnostic? You lost your voice. So, yeah, I mean, just the truth will set you free, as they say. So, and there's some bad. Edward, maybe you're smart enough to stay away from the really controversial ones, but there are some bad dudes out there. Managers just lie through their freaking teeth. So, you've chosen not to do battle with those types of characters.
I think if you look at somebody with a history of litigation, then I might be less likely to write on them just because I don't really feel like getting in litigation. So an
Sure.
example of that might be the CEO of Ubiquity Networks, Robert Pera. That's been a heavily shorted stock for a long time. It's kind of in my market cap range. It's the type of thing I might want to look at. The two things keeping me away is, one, it seems like people do like the products, and two, he's literally sued people before, journalists who have criticized.
Right.
I think he might have
Right.
had some merit behind him, but it's like that type of thing. It's like, okay, just avoid it and move on to lower hanging
Yeah,
fruit.
it's too much brain damage. No, completely. I get it. I get it. Um, so let me ask you this, Edwin. What have you've been doing this for a few years? I'm sure you've learned a lot. For those of us at home who don't have all your professional experience, what have you really learned the last few years that you kind of wish you knew starting out? I wish you knew. But I mean, some things may not seem obvious at first. Like maybe it's don't pursue valuation shorts, or pay more attention to how crowded a short is, or pay attention to if it has sponsorship. I don't know. I'm just making up stuff. But what have you, for those that don't do what you do professionally? What is it that you've learned, or what is it that they may not likely appreciate as much as you do because you're in the trenches doing this stuff all the time?
I think the biggest thing I've learned, and this is going to just sound so obvious, is you always really, really, really want to do your own work and think independently rather than relying on others. So I've been doing Bear Cave for 5 years. I write about 20 articles a year, so that's almost 100 articles now. And if I look back at the ones where I really screwed up, where the companies ended up rising significantly after my criticism, almost always, and again, I'm doing my own work, I'm reading the filings, I'm researching, but the kind of idea genesis is with somebody else who kind of is describing it to me, and I'm just kind of relying, at least initially, on someone else's view. So the big thing I've learned 5 years of doing this is you got to do your own work. You want to generate your own ideas, you want to do things independently, and what that means in practice is I'm going off lived experience, I'm thinking about the world, I'm tracking board members, I'm reading comment letters, I'm trying to have my own sources of idea generation rather than relying on others.
Yeah, it's really well said. I can remember years ago. I'm going back. Oh my God, 35 years, 40 years when I was at Fidelity, and I developed a similar problem. And it was exactly that. And so you might buy a stock or whatever, and because you trust so and so, and then it's not quite doing what you thought it was going to do. So yeah, so and so. Well, what about this? And then so and so says, "Well, Dilly recommended it to me." So and so didn't do the work. Dilly did the work, right? And then you ask Dilly, and Dilly's like, well, Rusty told me it was a good idea. So it's kind of like the emperor wearing no clothes. Like nobody bothered to look. So I feel your pain, Edwin. I know exactly what you're talking about. And the other thing too, it reminds me of a great passage from Reminiscence of a Stock Operator, Jesse Livermore, where there's one great it's such a great book. I've probably read it 10 times, but there's one passage in there where some guru comes through that everyone is saying is the best, and instead of trusting his own instincts, he takes the word of the guru, whether it's to buy corn or soybeans or whatever it is. And the problem is, if you're trusting your own instincts and the price starts to go against you, well, you have nowhere to look for but other than into yourself. But if you're relying on the guru, and the price does the opposite of what the guru said, you then ask the guru, "What do you think?" And it's like you're not in harmony with your own gut, with your own intuition. And Edwin, I'm sure it's the case. It's true for all of us. It's your gut that got you here. It's your intuition that gets you here. That's your your fight or flight response. That's your defense mechanism. So when you outsource that to somebody else, you just get lost. I mean, does that it all resonate with you, Edwin?
Yes, sorry, I was on mute. George, that
No
a
worries.
hundred that 100% resonates. When you when you rely on other people's work, then you don't develop your own convictions. So it's especially true for trading it. Like somebody can give you the best stock recommendation ever: buy Netflix when it's $1 a share, split adjusted. But if you didn't do the work yourself, when it goes down 50% over the course of the next 10 years while it's on its way to be 100x, you're going to kind of sell at one of those moments. So yeah, I very, very much believe in like doing your own work and really just trying to like understand the company's relationship with its customers and the value proposition. And I can't tell you how many times I, talk to a hedge fund analyst or somebody who owns a lot of the stock on a company I'm looking at or have written on in the bear cave. And I remember with Apple Oven, they're talking about this and that and what management says. And I just take out my phone and I show them the 10 Apple Oven apps I've downloaded and how the ads are being placed. And they're like, we've never even played an Apple Oven game. Or there was Ibotta, which is a coupon app company, and I downloaded the app and I used the coupons a bunch in New York City and like how the app works, and I wasn't impressed. And someone's like, "Well, I own so much, and the CPG brands say this." And I'm like, "Well, have you used the app and like shopped with it once?" And they're like, "No." So I think there's this huge edge where even the most sophisticated big people just don't want to do it. So you go, you use the products yourself, and that gives you an edge. And George, I think I got time for one more question because it's 1 a.m. here in Europe, and this has been such a great space.
George, you're muted.
Sorry. Yeah, yeah, Edwin. I'm sorry. I forgot. I forgot that you're in Europe. So one more question, and we're gonna keep going. We're gonna talk about you after you leave, but behind your back. But don't worry, this is a replay. So my new best friend. This guy's got a really cool name, but I have too much to drink. I don't know if I can get this right. This guy's don't Dilly. Don't ask me to say it 3 times. I'm gonna mess this up. If I get it right the first time, it'd be enough. Gregory McRonald. Okay. So before Gregory can ask a question, so Gregory wants to know. By the way, Edwin Gregory, I'm looking at his feed.
Hmm.
So he's a good guy because he was asking about something about how do you know what the right cocaine dosage is for the 3-year-olds in the centers that we're talking about. But Gregory, before I yield the floor to you, Gregory, like your name is a headache. Like, how did you get this name, Gregory? Please unmute yourself.
Uh, Hi. Yeah. I guess it's Eastern European. It's like Gregory. Some people associate it with like pregnant Gregory, but not sure if that's the exact etymology. I'm not pregnant, but yeah, it's kind of like Gregory, Pregory, that kind of thing. I've got some Irish in me, so Pregory McRonald.
So, Gregory, the floor is yours. You have a question for Edwin?
Sure. I guess I'll ask a question about shorting. One of the things that was surprising to me about, for example, Melvin getting blown up with his GME short. I'm just wondering, is it like not normal to hedge with call options? I mean, maybe that's a different situation where you have like a huge fund. Maybe they're using like all these factors or something, and don't use like direct stock hedges. They kind of expect the whole portfolio to balance out or something over time. Uh, but still, I'd wonder, like, if he had just bought, a shitload of, 20 strike calls for a few cents, 6 months out, he could have not blown up his fund theoretically. So, yeah, that's my question.
Yeah, Gregory, I think it is pretty normal for hedge funds just to short a stock and not buy out of the money call options. I think with them, the issue was they didn't really have the foresight to think, hey, there could be a massive short squeeze in this. And they were kind of doing, I'd imagine, what I'm kind of doing with the 100 long term underperformers list. They just try to find what they view as bad companies, retail companies, and take huge short positions. The problem is it's kind of like easy to get into that and not realize like that when these companies that have been sleepy and gone nowhere for so long actually have a turnaround, which typically occurs under new management but not always, it can really, really, really squeeze and turn around. Like there is a big precedent for these companies to be sideways for 20 years and then go up 500% in a year. So I think the bigger mistake is just having any sort of sizable short position in this heavily shorted small cap that's like trading at like zero point 0.1 times sales and could move a crazy way. Um, I think that was the bigger issue. I don't think you're going to solve everything by just buying calls. And with that, George, it's been a fantastic hour, and I want everyone to know I'll be speaking at your event next month, and I'm very much looking forward to it because you got a great lineup and it should be a lot of
Thank, th-
fun.
Thank you so much, Edwin. We hope to see you again. And we're not going to close the room just yet, but we're now going to talk about you once you leave. So, Edwin, I think it's midnight where you are or whatever. So, thanks so much for doing this, and
Thanks
we
so
look forward to
much.
hearing from you again. Thank you, Edwin.
Yes, see you guys at Dilly too. Bye
Thank
bye.
you. All right.
Thank you.
Nobody leave. You can't leave. All right. So what he didn't say, he let the cat out of the bag. So yes, we're doing another conference, but this one is going to be more stock specific. People were blown away by Mark Hodes. It says, you know what? We're not going to do such a macro conference anymore. We're going to do a stock idea conference. So some of the best dudes on Twitter. Uh, I've reached out to. Edwin is one of them, and so we're doing a conference. I'll tell you who we got. Just hang on. So we have Edwin. We have Jay Mintzmeyer, who is one of the leading shipping guys. So Dilly, we've seen enough pictures of Port of Long Beach with the boats. So Jay actually knows shipping. It's great. We're gonna have Motorhead. He knows more than just Tesla. We'll talk about autos more generally. Gordon, who actually threatened to talk about a long idea, believe it or not. That'll be interesting.
No,
Robert,
he didn't. No.
yeah, no, Gordon's. Listen. We don't need. Yeah,
I'm
so
kidding.
Rusty, what we don't need. I don't want Motorhead and Gordon pushing each other around. Who gets to talk Tesla? Plus, you know what? You know, it'd be funny. I may tell each of them you can't talk about Tesla because that's Captain Obvious stuff.
There you go.
So I say no Tesla allowed. So in any event, and then we've got Robert Mullen, MRA funds, probably talk about a resource name. Ross Hendricks, good friend, Border and Company. Enrique at Beta. He's the guy who got Talon Energy before it tripled or quadrupled a year ago. He's fantastic. We have Edwin, Alberto Alvarez on mining stocks. Tom Chanos, the brother of Jim Chanos. God knows what short he's going to come up with. And then an old Fidelity colleague of mine, Rose Soler, who is in Europe running an energy based fund. So I don't know if he's going to talk, well, I don't know what he's going to talk about, uranium or this or that, whatever. In any event, this is going to be a great conference. This is going to be idea oriented. You're going to have at least 10, maybe 12 or 14. And by the way, if anyone wants to come up and give me some input, what they want to hear from me, either on these spaces or in the conference. So we're going to have like 10, 12, 14 people pitching ideas, one or two ideas. It will not be an all day marathon. We'll limit this to 4 or 5 hours instead of 9. So it gives me a break. In any event, we're also going to make the price more affordable. And so, candidly, I mean, Dilly, you were at the conference. And Rusty, I think you were there too. The content could not have been better. I think Howard, you were there also. The content could not have been better, but I don't know if it's just the public not realizing what's on offer or the price point's too high or whatever. But any suggestion, Gnostic, you too, like I don't think you saw it, but any ideas? It's like, maybe a situation where people just, they like free and free is a good price. The problem is you're not going to get people of this caliber talking for free. So, yeah.
George.
So give me some advice. How should I do this? Rusty, want to say
So
something?
the only thing I'll say is and this was just highly unfortunate because it was phenomenal. That was the day that the big breakup happened. So that's what was flooding Twitterverse of Trump and Elon having their big
Right,
breakup.
right.
Yeah, so I think some of that got kind of just overwhelmed and overshadowed by people. I mean, it was hard to not go anywhere, and it wasn't just everywhere on Twitter.
Yeah.
Um, but no, I thought it was phenomenal. The price point, as the other people said, before, no, it was great. I don't think there's
Yeah,
anything wrong with it.
yeah, Rusty, I appreciate the kind words. The issue is you would appreciate this because you straddle both worlds. In the institutional world, conferences will run anywhere from, $300 to $3,000. All right. And if you make it to, and so for most individuals, they'll be like, what are you talking about? $1,000 for a conference? Like what? I mean, to go to the grants conference was recently $900. That was online. But you make it too cheap, you're really devaluing the conference. And so, people want the 89.95 special. It just doesn't work. I'm sorry. And the speakers love to come on because hopefully they can interact with the audience and get some more customers that way. But if people are going to say, "Well, it's free," I can get, I can go and watch, YouTube. Adam Taggart's going to have on any one of your speakers for free. Well, it doesn't work that way, and so I've kind of got Rusty, and I don't know if you got something you want to say on this, or Gnostic, or Gregory, or anybody. Like, I have an identity confidence because it's like, it's not build it and they will come. I mean, so we're going to try it a little different this time. It's going to be individual stock ideas, not so macro and strategy heavy. But
I
if people don't understand, Michael Howe. Okay, so Michael, let's be clear. Michael Howe is a dear friend. Michael Howe, though, is on social media all the time. All right. So you may say, well, why should I pay to listen to Michael Howe? He's on all the time, right? But Jay Pulaski, Ian Harnett, Louis Gave. I mean, these are guys, you got to pay some serious coin to get access to them. And so I'm looking at it. To me, it's like Captain Obvious. It's like, this is a huge deal. So I don't know, Rusty, you want to weigh in on this?
Yeah, the only thing I'll say about it is I think probably, I love the idea of the stock pickers and everything, and I would say maybe an industry uh specific, maybe not so much just focus on one stock or
Sure.
the other. Because there's certain people who focus completely on an industry, and they're the go-to there. But no, you're talking about a price point. Look at like Minervini. That guy charges like $5,000 to go to
I
that
know, it's
conference.
insane. All right, so Rusty,
Hey,
so let me ask you a
and
question.
I've been,
Yeah.
and I was like, okay, so you just basically use margin and just run it for a few days, and then you're out. Okay, I got it done.
And that was $5,000 for that.
Yeah, I didn't pay for it.
No, I understand, but
No, it was. I
yeah,
didn't
but
pay
that's
for
what he's
that.
charging. I mean, all right, so
Yeah.
let's talk about industry. Okay, so I don't want to have like 10 shipping nerds in. It'll drive everybody crazy. All right. No, sorry, I'll get to you in 1 second. But like, for instance, Jay Mintzmeyer, okay, like I've taken his service in the past. He's on Seeking Alpha. He really is one of the best shipping analysts out there. So, we were going to have him in his space, but he just had twins. So maybe, Rusty, should I have like Jay Mintzmeyer come in his space, or if we're at this conference where everyone's getting, 15, 20 minutes, let him have 45 minutes so he can give like a shipping lecture for shipping nerds. Like, what would you say?
I would say so that covers a lot of ground when you talk about just shipping in general, right? Because of
Sure.
everything. I mean, honestly, for me, when I hear about it and I look at the shipping world and I look at containers or however, whatever's being moved around the globe, that can tell the story for a lot of different industries.
Right.
So I think it's worth it.
So maybe what you're telling me is I should let Jay. I mean, he may decide like out of all the subgroups he's following, because shipping is covers a multitude of sins. And you're right; it cuts across so many industries. So whether it's containers or VLCCs or LNGs or bulkers, I mean, I know more about shipping than I really should know. I mean, trust me, I don't talk about this when I go on a date. Like chicks don't like to hear this. But at any rate, if you want to get into real shipping nerddom, you could talk for like hours just about bulkers. So Rusty, what I would add, most people like it's after like 5 minutes, like it's enough, I get it, right? So in the case of Jay, would you say, okay, instead of just limiting 15, 20 minutes, let him go for 45 minutes and let him talk about, 5 or 10 minutes on each particular subspecialty?
Yeah, I would say so because you're going to touch in a different
Yeah.
area, and that's going to explain a lot of an industry, right?
Yeah, because
So,
what'll happen is, how it works. To your point, what he's likely to do, if I just say one pick, he'll look at all his particular groups within shipping, and he'll decide, like, let's say, okay, VLCC is the most interesting because of oil demand, and he'll ignore everything else. I'll just pick out the best VLCC. So there's a lot of information content that one is losing. So maybe what I'll do is, and Rusty, I'm gonna hold you to this. Like, if I allow him to go on for 45 minutes about shipping and people don't like it, I'm going to remember who gave me this idea, Rusty. So don't you forget. This is a no lose trade. Because either people are going to
you can
thank me,
blame me.
either people are going to thank me, or I get to blame it on you. So there you go.
You can blame me.
Yeah, there you go. No, Rusty, I appreciate it. Gnostic, you want to say something? Gnostic, please unmute yourself. I don't know if he's there. Gnostic. All right.
Yeah, I'm here. I'm just layers deep on this freaking set of apps. What I wanted to do is tell the guy that was on earlier that one of the best research tools you can have is to be sued, because what you can pull out in discovery is immense. There's no controls over it. There's no anything else over it. Just like literally, I've been sued for a couple $1 million, and the guy that sued me regretted suing me so badly because I now had the ammunition to actually go after him full force. Now, I was sued on the basis of a mistake, but that mistake, the insurance company covered the cost. My time was a pain in the ass, but we used discovery to get information that nobody else had, anyplace else, no place else, fully disclosed and
Oh boy.
fully privileged. So
Oh
nobody could
boy.
sue me
Oh
on it.
boy. Oh boy.
Nobody
Yeah,
could
I
do the
get it.
rest of it. So it's like for some of these companies that he's doing, I mean, the problem is everybody looks at being sued like this is a problem. And it is. There's no issue about it being a problem. It is. But there have been people who've tried to sue me subsequently after that are basically told, don't do that. And the person gets really upset, yells at his lawyer, goes around, talks to another lawyer, and the lawyer says, don't do that. They say they're just all confused. I had one guy, I'm out having drinks in Toronto at one of the conferences. This guy walks up to me and looks and says, why the fuck can't I sue you? And I said, you're the guy that wants to sue me. Okay, you're a fucking asshole. Everybody in the bar, he's an asshole. The guy looks at me and goes, what are you doing? I said, I want you to sue me. And he looks at me and he's going like, what the, what? I said, sue me. And he goes, and the guy sitting right beside me was one of the regulators, Canadian regulators, who sits, looks at the guy and goes, don't do it. I said, why? He's been trying to get us to sue him for almost 20 years. He could do almost anything. We're not going to sue him. We do not want to meet him in court. And the guy just looks and goes, why not? I said, you got my name. Go look it up. I mean, all you have to do is read the transcript and figure out what the hell we
Sure.
did.
Sure.
So the biggest issue is sometimes when these guys sue you, it's the biggest mistake they can possibly ever do in their history, especially foreign companies suing within the United States, because you have full disclosure stuff and it's not extra jurisdictional. You can't sue somebody in Germany for something in North America. You have to come to America to sue. So when they come over here and they go to sue, I mean, the freight train just runs over them. I mean, I look at them like
All
they're little
right. So
suckers.
so basically, so everyone's clear about this. The issue is you have total access to all their information, which otherwise you couldn't get had they not sued you. Is that what you're saying?
Exactly. Yes. And they
Okay.
must turn it over or they're in contempt of court.
Wow.
Just so you now have jurisdictional authority to sit down and pull out information that you would have no other
Right.
way of getting.
Right. And especially the presumption is, since you know all you're a Boy Scout and you do everything by the book, they're probably a bad dude, a lying
Exactly.
bozo. So
Exactly.
it's like you got nothing to hide. It's like, dude, you just I got it. All right.
Yeah.
You have to
So,
open the kimono. Oh wow. I never, this is awesome. I love that, Gnostic.
oh yeah, but this is what I wanted to tell him when he was here. Like, don't fear the lawsuits. Figure out whether or not this one is actually worth the legal fees to sit down and do it. But before you do it, make sure you get the nastiest defamation lawyer you can in New York to sit down and train you on defamation so you don't get trapped.
Right.
It's a skill. It's a trained skill to sit down and do it. Lawyers go through it. The best lawyers sit down and run through it. Do all the. I like the guys that are sending out hearts and everything. These guys have been through it somewhere, I bet.
That is
But
Gnostic. Gnostic. That is genius. That is
oh yeah, it
genius.
it totally like I mean there was a guy, a comedian that gave a card, sued for defamation because they called him gay in England a long time ago and it wasn't there, and I forget what his name was now. Everybody will know it right away, but he was sued, or he sued for defamation. Totally backfired. It was proved that he was in fact gay, because defamation is the only thing where you have to prove that you're not what you're accused of being. That's almost impossible. So you've got a bridge to climb is almost impossible, but you open the kimono completely in order to sit down and do it. Your questions don't have to be about the defamation. It can be anything, literally anything in the discovery.
Wow.
So the
Wow.
kimono's open. Rusty seems to like this a lot too. The kimono's open. You've got blanket access to everything. They can't deny it or they get hit with contempt of court. You just hit the like the lawyer the lawyer I used in New York just loved it. He's like, oh, we'll just hit him with another one. We'll hit him with another one. We'll hit him with another. I said, what are you doing? Charging me 10 grand for each one of them? Oh
Yeah.
no,
Yeah. So, yeah.
this is just
Yeah.
fun
I
now. The
get it.
lawyer
I get it. I get it. So, Rusty, let me ask you. You don't strike me as a litigious type, but you deal a lot of these crazy newfangled financial weapons of mass destruction. I can imagine there's a fair bit of litigious stuff that goes on. So, Rusty is what is
I dealt with credit risk, and you can only imagine
yeah.
what happens in that instance. So, it was one time it was really funny. This guy is a very we were dealing with so we were basically I was dealing with a pool of loans, and I had a hard ass as a partner. He I don't want to tell the story. It's yeah. It's he took the guy's wife's uh Porsche because we had basically he did a blanket you know across every one of his assets, and he wouldn't respond initially, so he sent someone to get his wife's Porsche, just that. And it was a whole situation. So
All right.
but I got involved with a lot of the in the CLO world. There were a lot of the term Bs that were
Yeah,
the same way.
I can only imagine. People that know what they were
Yeah.
signing. People that know what they were signing. Hey,
Hey,
all right. So,
George, what I was going to do is help you a little bit on the other stuff too. You see
yeah.
deer down there. I would bring in deer,
No, no,
and
no, Gnostic, we're going to. I'm going to ask a
no,
ridiculous
no, no, no.
question.
But I want him to come to the conference.
Oh, all right. Well,
I
you
think deer would
know,
be great at the conference. And there's a few other people too, like the guy that's got the little boobly thing that was on Twitter for quite a while, and then decided he was just going to go. Deer, you know who I'm talking about. Um, and he's really good at doing all this too. But you're bringing in a new generation. The people you're talking about are all first and second generation, instead of bringing in third and younger generation. These people attract a totally different audience.
no, I get it. So listen, anyone got a suggestion, tweet me, DM me, anything. Because, like, I know we got the content. It's just a question of trying to get the marketing across the right way. So, but thank you for that, Gnostic. However, I want to stay on the thread we were on. So we're going to do Deer Point and then Howard. So Deer Point, if you want to take a pass on this, that's fine. But here's the question, and I'm sure you've seen your fair share of it. I want to know, and Howard, you're next. Same question. Yes, Daily. We'll stop this at 6:30. I want to know, Deer Point, what's like the most ridiculous litigious situation you've been in? Either you sued somebody or they sued you, or you haven't been involved. You just saw something nuts. Because when the lawyers get involved, like weird stuff starts to happen. You got any good stories for us, to your point?
Off the top of my head, no, because I mean, I'll kind of give a bit of a background. I mean, I worked for BMO for a while, and then I worked for Fidelity for a bit, um, and now like a few other firms. But because they've always been very large, and either I was in the position of being an analyst or otherwise, that would never fall on me, right? That would essentially fall on the bank. So I've never really been in that situation. Now that I'm at a smaller shop, I mean, now there's the potential for that, but thus far, nothing bad has happened.
Got it. So before you go, is there any? I mean, I don't know if we dragged you in here or something you wanted to say. I don't know if you heard the space or not, but I want to be respectful and give you airspace. Something you want to talk about?
No, no, I mean, I just think,
We're good.
I mean, there's a lot to talk about. I mean, we're
For
living in
sure.
interesting times.
For
Uh,
sure. For sure. Well,
but
given we've got. Yeah, sorry. Go ahead. Go ahead.
no, no, I just think it depends where all of this goes. The whole situation in the Middle East has kind of
Yeah.
been top of mind. But I mean, I think that's everybody's top of mind now.
For sure, for sure. And given that we've got exactly 9 minutes to go in this space, we're not going to open up that Pandora's box right now. I mean, Dilly, maybe Letterman will have a space later or something like that, or Bellagio or somebody. Hey, I don't know. Howard, my friend, I'm sure you've got some good lawsuit stories to tell. Howard, tell us a good story.
Well, I'm going to skip over the biggest one, which was real early in my days, but was a transportation related antitrust suit against a carrier. We ended up the plaintiff, but it was because we got sued in the first place. That's a story for a different time. But George, you and I on the shipping thing, someday, because that's it's too many wormholes, too many wormholes. But from international transportation law to like doing the documents on a desk. Um, but on the litigious thing, The best one was a small one, but
What was that?
it started out. We were manufacturing nutritional products for a company in Japan. I knew my partner over there personally, and he shows up in Long Beach at my manufacturer, and he's trying to, make a direct relationship. And I have my lawyers send a quick note down there to the two of them, and they both figure out that they're in the kind of situation and in the position that Gnostic's talking about if they go forward, and they both drop it. But a few months later, and this is where it gets completely wild, my partner in Tokyo, his partner who was in the collections business, turns up dead. It they
Wait.
this
Somebody turned up dead?
No,
What?
almost two guys. This gets really weird. So he turns up dead. He was about to meet his daughter for breakfast or lunch. So we know the guy. I've met him. No, no way this was, he was. It was mocked up to make it look like a suicide. Turns out that the people that came after him then came after my partner August, and the reason they came after him, we didn't know this. August disappeared for about 3 weeks, and we couldn't figure out what, we were in the middle of formulating new products. We couldn't figure out what the hell was going on, and we can't get a hold of him. He turns up in the hospital, and they're only willing to let him use his phone like half an hour a day. And they tried to kill him by running a taxi cab off the road at high speed. And it turned out that the big money lenders over there to small and mid-sized business are the Yakuza. So August's partner, Murakami-san, had borrowed like $100 million from these guys to run his collections business. He got killed. We still don't know the circumstances. August ends up in the hospital. They take over his company. We're in contracts. We're trying to keep the business going. We don't really realize who's done this until later.
Wow.
And so they're threatening to sue us in the United States. And my lawyer says, no way. They don't want to be exposed if they're tied up with money lenders or any people like that, which is how they got into his company. Um, they're not going to want to be exposed. He turned the thing around on them. The punchline is we had a small invoice hanging out there. We never did any more business with them, but we had a small invoice hanging out there. Howard Terry somehow got the Yakuza to pay their final invoice to
Really?
his little company because they didn't want to be on the other side of anything with us when they realized how exposed they could be if they were trying to sue us over here.
So I
And
just want to.
the paper wasn't flying here yet. They hadn't sued us yet here,
Oy.
but they got spooked enough that it was only a high five-figure invoice, so it's not like a giant deal.
Well,
But
Howard, I hope you got the movie rights for this. It sounds like a great story.
that's kind of a couple of people have said that. I'm not sure it's quite there, but
Yeah.
anyway, it's one of
All right.
one of the
So
crazy
listen, I
ones.
want to go to Gregory before we close this. Gregory, you got a good litigious story for us, Gregory?
I don't think I've ever been sued. I was a moderator of a large Facebook stock trading group, and I was rather sarcastic and harsh with people who tried to scam or promote their own, skills, but through dubious means. So I did have. There was one guy who threatened to sue me. He looked up where I worked and said he would, you know, email them and sue them, and he'd sue me. And I just kind of laughed at him and made memes about him. And he eventually just sort of shriveled up and went away because um, I think one of the problems with when people threaten to sue you, it's like a gorilla, like a great ape, kind of charging at you. It's like
Yeah.
if you react, you might get killed, but if you remain calm, you'll be fine. So yeah, I guess another quick example of that. My uncle actually got sued by patent trolls, and I told him just ignore them. They send these letters out to like every business in the country, and they just if you respond, it's like you're taking the bait. But he did respond and ended up paying them. So yeah, that's kind of my impression. Just treat them like great apes. Don't flinch, remain calm, and they'll go somewhere else.
That's really good advice. And but last thing I'll say, and we got to close this from, I put it up in the nest. So I'm sure you've all been subjected to this. So I'm on Facebook, and I know, Dilly, Facebook's for old people, but I'm on Facebook. And I don't know if any of you go on Facebook or have been subjected to this lately, but you get this stuff in your feed. It's like, Tom Lee Stock Trading Group, or, Richard Bernstein Stock Trading Group. So, like, they have all these, like, big Wall Street names. So I clicked on this one thing. I couldn't believe, like, a Tom Lee Stock Trading Group is appearing on my feed. So I click on it. And the next thing I know, I'm getting this thing on my WhatsApp. Hi, this is part of the Tom Lee Stock Trading Group, blah, blah, blah. We're coming out with a special super duper idea tomorrow. I put it in the feed. Be sure at 9:40 a.m., blah, blah, blah. Can we help you with your trade? Blah, blah, blah. So sure enough, this morning it comes out. It's this thing. I think I got the ticker right. PTHL. PTHL. The thing's gone from 3 to 17 in the last 6 weeks. Okay. I don't think it's got any revenues. Like, what could possibly go wrong? Right. And I'm like, are you kidding me? And I get this all the time. This is not the first time this happened to me. And so it's really unbelievable, Dilly. I mean, Dilly, the question for you, imagine someone goes on Facebook and they claim to be you and they have a picture of you and they go, this is the Dilly Stock Trading Group, right? They just, and they say, and they say buy GME or something like that. I mean, could you imagine? I'm sorry,
Well,
I had
I
to, I had to
would
say that.
say that.
I know you would, but no, but imagine though, someone impersonates you, okay? But that's what they're doing,
Yeah, the
and
audacity.
it's unbelievable. So maybe I got to stop being an honest broker with these spaces. And all right, so anyway, seriously, guys, we're gonna close this space. But if anyone's got any ideas for this conference or whatever, because like I think it's real value add. And like, I don't want to bother. I don't want to do these if people aren't going to come to them. But listen, it's not for charity. I want to make a couple dollars off this for sure. But if you can get 15 smart guys like Edwin in at once for a couple $100, I mean that's an unbelievable deal. So I don't know. I'm kind of learning that build it, and they will not necessarily come. So that's the issue. But in any event, all right, boys and girls, it's 6:30. We've been going an hour and a half. We're not doing a space tomorrow. Thursday is Juneteenth. Everything's closed, and I figure Friday it's going to be a long weekend. So Dilly, if you want to do a space Thursday or Friday, let me know. I can't do one tomorrow. Reach out to me. Otherwise, we're going into next week. So that's it for now. And thanks everyone. And we'll see you guys next week. Everyone
Bye,
take care.
guys.
Good night. Good night. Bye.